Alrighty, so I figured I will put this in the beginning of the video because I forgot to mention it on the webinar. So, initial balance, to get the indicator, it's literally just called IB first hour. Joey Morgan is the original author, but it's open source. So that's why my IB is going to look different. Because I wanted to add in the fib levels, because when I was trading my fib model, I used to manually just draw the fib ranges. So I always wanted it in there. Plus, I only use the 50%. And by default, it will have the 25, the 50, and the 1x extensions. But by default, your indicator is going to look like this. So you can keep these on if you want. I just don't use them. But the main thing we're looking at is for setting the window. So initial balance is, as described, it's the first hour of a session, as I've said before. So each asset will have a different window where it works the best. So for me, these are what I use personally. And the reason why I'm using 30 minutes on some of them is because I like to be more aggressive and trade the breakout. For NQ and ES, we're using the break and retest model most of the time. The breakouts do work, but it's a 62% chance, and your stop loss needs to be at the high, so you're risking a lot more to hit the 0.5 level. So statistically, it's safer to wait for the break and retest because, like we say, historically, it's a 70 to 80% chance that we will continue going in that direction and also hit the 0.5 level. So it's just a better statistic to go for the 0.5. And if you're going to hold for the 1, then you would have to either not go break even and hold a running contract, or you would risk going break even when the 50% level gets hit. But there's more chances that you could get potentially stopped out when going for the 1. So all you have to do is just take a screenshot of this. So again, the NQ method is for New York session only. You can use this for ES as well, but I just don't trade ES personally. And so I've put the statistics here, which came from Edgeful and Google and ChatGPT. They all say the pretty much same thing, that once it breaks out for the rest of the session, it's a 70% chance that it will continue that way. So all we're doing for the entry model is going for the 0.5 level, because in the same session, it's a 70 to 80% chance that it'll get hit. So we wait for the 5-minute close above, then we just have a limit set on the initial balance level that it broke out of, be it the high or the low. When the stop loss is placed, it's placed at the 50%. So like today, happened exactly as we explained in the webinar, that if buyers fail to take price higher, it was more likely we're going to break out. We just didn't get a retest. But your stop loss always starts at the 50%, because when you target the 5 extension range, it's a 1-to-1. So then when it goes to the 25, you can go break even or better, de-risk by 50%. So when you're at the 1-to-1 originally, you'll see a 1.5 on the stop loss, and you will also have taken partials. So we've taken partials and leaving your stop loss to have room. If it does stop you out, you're still losing nothing because you've already taken off like some of your position. But obviously, if you go break even and you can take profit at the 50%, then that's fine. If you're holding for the 1, then obviously leave it at break even, or just leave it at the 5, because again, there's chances where it can come up and then shoot back down again. So that's a discretionary decision, but the mechanical model is just the 1-to-1. And then I like to just de-risk by 50%, so my stop loss gets reduced. Because more often than not, especially if it's a good breakout day, it will just hit there without coming back to your entry in the first place. For Bitcoin, it's 8:30 to 9:30 a.m. Eastern. For GJ, GU, and EU, it's the London Open. For UJ, I'm also using the 1 hour, and it's 8:30 to 9:30, just because it's a USD pair. as well as the Japanese pair, but most of the injection comes in at this time. And then for gold, I go a bit more aggressive because instead of waiting for break and retest, I want to just take the breakout. So XAU, GC, micro GC, it's 8:30 to 9 a.m. And then Russell, US 30, YM, whichever one you want to call it, is 8:30 to 9 a.m. as well. And to change those, you would have to go into the custom window. You would choose custom. And then this is in Central Time, so it would be an hour behind. So for gold, I would have it set at 7:30 to 8 a.m. And that's pretty much that. And then again, you can have the dashboard show or not. You can change all these different settings, but all of these ones I just leave as they are. Because again, I have my own custom thing. So again, this just tells you the range, which is what I'm normally looking at. So if we go back to New York, the range has been locked after the first hour, and it was a 223 point range. And then again, you can look on different pairs to see how often it gets those levels. So like even today, we had a amazing Bitcoin just straight to take profit. And then it reversed. Bitcoin is one of the rare ones that will do both sides. So that's something to keep in mind. But after hitting the 1%, the 1x on Bitcoin, I would probably remove my position short because I've already taken the full trade. It's discretion if you want to take it, if you want to hold it, but you would have lost that one, but your profit would have covered it. And then if you re-entered, you would have made back your loss and still be up profit. So that's discretion. And like I say, with NQ, as we was explaining in the webinar, we failed to make new value higher. We had absorption of buyers, and sellers took back control once we closed below. So that was a good indication that potentially we go lower, and we did. We ended up breaking out and hitting the full 1x target. So those are the timings. Just make sure you rewatch the rest of this video if you haven't already, and it will go over it a bit more detail. Right, so I'm just recording again. So what I normally do, like I say, you'll in the order flow prep channel, you'll see that one of my preps for the New York session, because that's the main time I only trade, is that I'll take the volume profile and draw the overnight session. So on the Globex Open, which is 6 p.m. Eastern, I will take the fixed range volume profile to 9:15, 9:20 a.m. Eastern, just to have the levels set, because normally these won't change within like 10 minutes before open. So we can see here. So if we're just going by the pure volume profile, what have we got? We've got a double distribution here. We spent a lot of time in this level, but then we have a low volume node, and low volume nodes normally get sliced through to the downside or upside quite quickly. Here's the point of control. And the point of control is like what it says on the tin, basically. This is where buyers and sellers have now agreed is like the best price to trade from, but you normally get like a lot of consolidation. So you just basically map it out with a box, because you're mapping out this high volume ledge to the low volume. And then you use the same principle of absorption. If this is the accepted range, before we even look at this, we can confirm it with the sell-in bubbles. So can everyone see those? How many times sellers tried to push price back down to a discount for buyers to get in, but buyers were like, no, we actually like this price. So the fact is, before market open, because again, the box is drawn here for volume profile, market open is like 10 minutes later. So again, this is where volume profile is not a hindsight method. You use this to frame your bias. If we're accepting ranges higher, before we even got to New York, what was the probability that we were going to go higher before New York open? Obviously, it's not going to be a set statistic, but it's very high because buyers certainly got interested when they first tried to break through, but then they sought resistance from sellers at this volume shelf. But the fact is, if sellers were supposed to take control on this level, why did we not go super low? We didn't even go back outside this range where sellers tried to push price down multiple times. And they could have had an easy job. They could have sliced through this and made like another 40 points just going through this node. And your take profit would be there because we have these 3 high volume shelves. And we can see that buyers took control. This was resistance until it got turned into support because we broke above it. And that's why I'm saying, like, draw a box or a zone around clusters of sellers. We already knew at this point in time that sellers were having control because we managed to take it down and we set the value area low for the day or the overnight session. But then we failed to go lower. As soon as we close above, what did I say was one of the other entry models? Stop loss under the box, go for a 2-hour trade. We get a 3-hour trade, 4-hour trade if you're holding it. Sellers tried to push price back down again, failed. Buyers started showing interest in these price points. So as soon as we close above, that could be your conservative, and then stop loss would be under the 5-minute candle, like you would, as I said, with volume profile. You do the same thing with initial balance, but with initial balance, you have a set level. As soon as we close above, we started going higher. Even though sellers were strong here, it's the same thing. These levels are already preset. Drag the box. Sellers tried to push price down. We didn't even get to the point of control. So as soon as we start coming back to this zone, this is how you can play volume profile. So stop loss under the structure for the safest. And again, go for a 2-hour trade. This literally hit to the tick, 2 hours, and then reversed. That's why I'm saying, like, the 5-minute failed auction method on volume profile is goated, and then just use it with initial balance. And now that we already have bias for the day before market opened, we can let initial balance confirm it. So far, we're just ping-ponging, which is fine, because again, the range is still forming, so we still have 10 minutes yet. We don't have any absorption for some reason. So there's no aggressive participation from anyone except the buyers 10 minutes into market open. So you want to see them defend price. I'm still recording future. So I'll be done in a second. So like I say, we have this big bubble. Buyers need to be protecting this zone. If we start closing below, it's likely we can do a break and retest of this zone if you were using the bubbles, or for me, I'll be using big trades on motive wave, which I don't see any at the minute because my indicator's turned off. It's on another screen, so you won't be able to see it. So what I'm seeing on motive wave is 100 sellers around here. So sellers need to defend this price. So this gives us more context for the day. And again, this is just extra confluence. You don't have to know this stuff if you don't have access. You have the bubbles, which is good enough for trading view. I just like using deep charts and motive wave because the big trades is more accurate to actual executions. Absorption bubble is just based on estimated volume at the time. It's not like this bubble doesn't mean it's like 100 contracts by one person. This could be like 1,000 people with one contract, but it's still a good enough indicator because, like I say, you see it time and time again. We have big bubble, we close above, buyers won the battle, sellers get aggressive, we don't go lower. Higher probability of going higher is higher. It's as simple as that. So for today, for this initial balance, sellers are going to defend this price and buyers are defending around 3,800, which again I can see on my motive wave. And we know and again, this is the thing, this is the beauty about it not being hindsight ever, because where were buyers interested before? Here. And it lines up with the big trades on Motive Wave, so around the 800 level. So if buyers have candle closes by sellers, that gives you more confidence to go down. If sellers lose control and we break up here, it's likely we can go up. And that is the end of that segment. So basically, initial balance. I'm explaining this for a YouTube video, so just let me talk for 5 minutes. So essentially, this is an institutional model that obviously institutions and big players use. It's as important as using like fixed volume profiles to check, where the most volume is. But then once those levels get broken out, it's like if we do the overnight session volume profile. I'll just take off the absorption bubbles. We find ourselves, this is the day before Thursday last week. So on the overnight session after FOMC, this was the balance profile. So price tried to make new value shown by this gray area, but we kept failing and ping-ponging from the value area low and high. So on these days with volume profile, what traders will do is just look for the absorption on both ends to take it to the opposite side. So if buyers are getting trapped, they'll take it to point of control for take profit 1 and then value area low for the full take profit. But it's safer to take partials and break even at point of control. Now, where initial balance comes into it is, you see how we've got the value area high here. Once we break above it and accept it, we aren't going now into the below 50%, which can predict that we're going to see higher prices because we've broken out of this range and we've accepted. And obviously the IB gets then set. So from the first hour of New York, from 9:30 open to 10:30, an initial balance will be set. It's otherwise known as opening range breakout, but they normally use that on the 15-minute. Initial balance is like the official term for the hourly, but you can also use it on the 30-minute. So every asset has like different timings, which is what I posted in the Discord. So I'll go over them later on. But essentially, you can use the initial balance as the same thing. So if we break above, as we kind of tried to do here, we slightly came over it, only by a little bit, but then we retested the 50%. The theory is, and this is backed by historical data, that if the buyers break out of the top range, then buyers are pretty much going to defend this upper half of the range, essentially. So when it breaks out, it's statistically, in the entire history of NAS, because this is what it's mainly used for, there's a 70% chance that once it breaks, for the rest of the session, it will continue going that way. Which, even though, this was Thursday, like it did do it. So where you take profit is with the extension. So the statistic is that it's like a 70 to 80% chance that the 1x extension will get hit. But lately on NAS, I've not seen that happen as much. So the statistic is a lot better for going for the 50%. But the way you trade it is the same way you would trade volume profile. So when we break out of a range and we accept that range, you can do a break and retest. So I do this on the 5-minute. And like you can see here, when it first broke out, it already showed that buyers were stronger in this area, and we failed to like stay in the lower range of the session. It's very rare that both sides will break and retest both sides because it's backed by data. If people are happy with higher prices, then it obviously makes more sense for that session. It's going to go up for the rest of the session. So the way you trade it is on the 5-minute. So even though we had a close here, it was kind of like small, but then we had like a bigger close and then we retested it. So you basically just put a limit order and then you'll take it to the first to take profits. So at 25, I'll go to break even, or I'll trail my stop loss, which the stop loss ends up staying when you first trade it because you go for 1-to-1 essentially. And obviously the points are going to be a lot bigger, so don't be scared to like trade like 1 micro. So to the 0.5, and with stop loss at the 50% of the range, that's your 1-to-1. But what normally happens is once we break out of that range, it's very rare to come down this way. So you can start trailing aggressively. The 50% is just your safest area. Because like I say, in theory, most of the time it won't come back to your entry. So once it gets to the 25, your stop loss gets reduced. So now it's like a 1.5 RR trade, right? And then once it hits the 50, you can basically just take your full profit there because that's 126 points. The risk management, I kind of just glossed over, but again, it starts with a 1-to-1. You hit the 25. You have two choices. Like, this is discretion on the trader. Like, I'm not making a decision for you. You de-risk by half, or you go straight to break even when you hit the 25%. Because, like I say, even this day, you would have been safe. Like, it nearly came to the break even, but it didn't. So you've already locked in 25%. The other thing you can do is take partials. So if you're trading like 2 micros, 3 micros, or you're trading on US 100 on Forex, which is what I'm using for this method too, is I'll take partial profit and then just go break even. Because at least, worst comes to worst, I've at least secured like 50% of my position. When it gets to the 50%, then obviously you can trail your risk, your stop loss to the 50% if you're going to try and hold it to the 1. But it's very rare. I wouldn't say it's rare, but it's hard to get the 1 when having your stop loss here because it's more likely going to start retesting because these are key levels in initial balance. So you can see like once we broke above the 25, after we'd hit the first profit, we kind of retested the initial balance high, but then we started testing the 25%. So if you got taken out here, you could enter again here, go in for the 50% level. If you're going to start the trade, go in for the 1R, the 1X, sorry, then your stop loss needs to be at the initial balance low. But your stop loss is going to be a lot bigger. But like I say, you can trail it, but it's just the safest area because it's rare that it will come back in the session. Like this is the session, and then around here is the Asia Open. So you can see what happened. Like we came down, we tested the low, we didn't break back below, so it's not a downside play because we didn't close on the 5-minute below. And then basically you can also reuse these levels because like I say, institutions using those levels. So we broke back above the initial balance, and then stop loss is going to be, again, if you're taking it for the first time, obviously stop loss needs to be at 50% just for the safest. So just missed your stop loss. But then again, you can also trade it in volume. So even like Future took his trade somewhere around here, you could kind of try and repeat the same play. But what I recommend is just going for it the first time in the session because that's where the stats come from. It's like a 75-80% chance that the 0.5 level will get hit in session. And since we're trading prop firms, it's within our rules. And then you can just literally wait for the next day. So even though this was a bank holiday, we did break above, but we're expecting a rangy day. And this is where the absorption bubbles come into play because you can see failed breakouts or failed auction, which is another theory that I'll teach later on. But it's the same principle. Like if we break above, but then we don't like retest this and start moving up like we should, it's likely we're going to be in a range. And again, this is holiday, so it's going to be low volume. So in this case, you could just ping pong from each side. And then we finally do, on the Sunday Open last night, we break through, which is technically a break and retest. And then you would have your position waiting. And again, this is why I say the 50% is the safest spot. This was a small range. And again, it's discretion to reuse the levels after the New York session. But again, this hit beautifully the 1x level. So you was risking 31 points to make 60 points. And then again, once it hit the 25, you might have got taken out break even. But with the risk being this small on this day, it was discretion to like not have to trail my stop loss because again, we were overall like bearish the last session. And it's confirmed by the fact that we break out. So basically, this is also like your bias method. So if we look at today, like today's new initial balance is forming. So on the indicator, there's a dashboard that's enabled by default. And this is just handy to know how big the range is, because I did a load of manual back testing over 2.5 years. So it was like 176 trades or whatever it was, and that was like mechanically taking a trade every day. And that was with my custom longs only model. But what I found was when you look at the IB range, if it's over like 300 points, it's pretty much likely that it's just going to continue going up. So that gives you like if it breaks out of the high, it's likely it will just continue going that direction. So it's like another bias that you can use. And then you'll notice as well on my version of the indicator, I have these fib entries. So my mechanical model is trading on the 3 minute, and I'll use but we can use Friday as an example. So since we broke out here, normally I wouldn't take the trade on my mechanical model, which is basically initial balance gets set. We have a closure on the 3 minute back below the fib long. So technically we wouldn't actually have got a trade here, but imagine the candle had closed below. My position limit order would be waiting to be activated, and it'll be a flat 50-point stop loss, and the target would be the initial balance high. So obviously this was holiday, so the range is a bit smaller, so I wouldn't take this because it doesn't give me a 50-point profit. The reason why I'm bringing this up is that the initial balance is going to be the first take profit in this case if you're entering off the fib level. So my entry model is 3 minute close below, and then as soon as it comes back to the level, I'm tagged in with like a buy stop. Or you can let it manually close and let it retest. So imagine, again, this candle closed, it closed back above, and then retest. So then my entry would be either manually executed or it'll have a buy limit this time. And again, whatever the initial balance is, that's going to be the target. So if we look at Thursday, which might be a bit better. Yeah. So annoyingly, it didn't come to the fib long, so I would have missed this trade, but that's where the break and retest comes into it. So initial balance is locked here. We close above, which invalidates the long idea, but it's still a discretionary thing to use. So if it already breaks the low, the initial balance level, so that can either be the high or the low, it invalidates my trade waiting for an entry on these levels because it's more likely going to retest like what we got here. But the entry model would be if the candle closed below after the range is set, which is shown by the grey box, my stop loss would be 50 points. And as long as the initial balance gives me at least a 1 hour trade, in this case, it gave me a 3 hour trade potential. And this is a 58% win rate of only taking longs before it breaks out. So sometimes it will stay in the range, test this level, and then break out later, which means even though you're risking a flat 50 points, now that we know the statistics of it breaking out to the 0.5, this now becomes a 5 hour trade. So even though the win rate's not super high, the profit factor at the end of the 200 trades was 2.34 profit factor. So that was more than worth the risk of like losing 3 trades in a row. And again, the statistics are in the Discord, so you can see that for yourself. The other discretionary model is if it has broken out, you can also have a limit on the 50%, because like we said, the theory is, well, it's not really theory because it's backed up by data. If we break out of one side, then that side's going to defend. So buyers are going to defend this level. So you could have had your entry here. And then to give it confluence, what do we get? We get absorption bubbles of sellers. We close back above. So you can take your entry on the closed candle, stop loss goes under, and then you can just do a 1 hour trade. But since it's already broken out, you can hold it. So even though your stop loss is bigger with initial balance, you're still making at least a 2 hour trade if it hits the 0.5 from the 50% region. If you had it just placed there, that now becomes a 3 hour trade essentially. So there's multiple ways of playing it. So that's why I put in the different strategies. The one for only longs, and then the break and retest. So like I said, we'll go back to today. And so the dashboard tells you it's still forming, and it tells you the range. So right now it's a 170 point range, which is good if you're taking the long only entry, because as the range sits currently while it's still being formed, it's 108 points. So you're getting like a 2 hour trade essentially. And like I said, I'll have like more videos on YouTube. Like I was recording this just so that I'd have to keep repeating it. Yeah, and now, so here's the beauty. So Future's already had a peak of this, and what normally happens with Bitcoin is that it instantly breaks out one side. So already, first target's hit, and now look, second target's hits, just showing it, and it's more likely to get to the 1 level. Now, normally, like I say, what I'll do, because I'm on Forex and I've got my personal account, I have 2 positions waiting. So I would have already won this position. My full take profit was pretty much already hit. So that's a $200 trade. But since New York volume injects volatility to Bitcoin as well, you can go heavier. So if I was the max I can trade on my account, I'll trade up to like 5 lots. So just this target, which I know is a high chance of getting hit, because we can go back on the other days. Let me just put the labels on so you can see them a bit better. This 0.5 gets hit pretty much all the fucking time. So first breakout yesterday, and I love trading on the weekends. So this hit take profit on Sunday. It hit the 25 again, and then we closed on the low, retested it to the tick, no drawdown, hit the 1, and then went even further. So for me, that was a $668 trade on 1 lot, which is insane. The thing with Bitcoin is initial balance was not made for Bitcoin. Initial balance is mainly for like NQ. So like I say, you'll find on the charts that it will break both sides. But again, the beauty of having a personal account is that I can hedge positions. So I don't have to wait for anything. I can just have an order set and just leave it, and I'll have my alerts. And she'll disappeared now. She'll just say, hey, take a look, and then I'll know when to go break even. But like, even this was Saturday. On this trade, I took a mini loss because we did break out of it straight away, but we didn't hit the 25. And then I saw this absorption bubble, right? So as soon as it closed there, I just decided to pull out the position. That's what she said. So like, sorry, the entry is there. Stop loss, again, and this is a mechanical model with a high win rate. So stop loss at the 50% is the safest, but like I say, Bitcoin normally just shoots through both sides to the 0.5. But obviously on weekends, it's a bit less probability. There was some kind of like news or something, because that candle just went straight flying through. And not only I didn't have time to put my other order there because I was still managing this position. So instead of risking the whole $230, as soon as we closed here, I just stopped out for like a $46 loss. But then instantly was like, oh, I'm going to switch, because I started seeing injection of volume here. And I tried placing my buy stop, but MT5 is so clunky sometimes that I end up missing it. And it already hit the 0.5, but then it hit the 1, rejected. And then at this point in time, I was like, okay, I'm not trading anymore. And then look what happens. We retest the initial balance, and where do we go? Back to the 1. And again, so this one, again, I would have bet the whole house again on this if I knew that it was going to tick it. Because, and this is the thing with Bitcoin, you can go break even quite quick. So like I said, today's, look at that. Again, this is not hindsight. These are mechanical entries. You just have a limit order on both sides when it comes to Forex. And this initial balance applies for everything. So like the different pairs have different times. So again, they're listed. But again, here's today. Here's British pound, Japanese yen. Straight away, breakout. Where do we hit? The 1. So you're risking 19 pips to make 37, whatever. And then with Forex, sometimes it has these explosions. And like I say, you can go back in time to see, like, look, here's Friday. What do we do? Instant breakout to the 1. Then we start retesting the 1. So it's risky to take trades off the 1 level. I ever take a trade here, hit profit, and then that's it. And then again, here's Thursday, instant breakout. So order waiting on both sides. That's the cool thing about having a personal card. Like I don't have to worry about hedging rules. But as you can see, like this method works great on both. So Russell on Thursday, we hit the 0.5. Does anyone have any questions about initial balance or volume profile? Initial balance is supposed to be 1 hour, but people kind of like retrofitted it to be a 15 minute. So you'll hear it be called the opening range breakout. But the 30-minute and 1 hour. Yeah. So I'll put more stuff in the Discord. So for example, gold, I like to be more aggressive with that. And I just have it set to 30 minutes. But it's not the same time every time. So gold, for example, is 8:30 to 9:30 EST New York time. But I have it to 8:30 to 9 because I want to be more aggressive on the breakouts. So you can see here, this was Friday. And even on a low probability day, we for some reason on gold, we edged the 1%, but on the micro, we actually hit it. And I'm trading micros anyway because of Apex, so I only have a smaller account on that. But you can see here, like, again, this is why I say stop loss is always going to be safest at the 50%. There's no point trying to be like super cool until you start trailing and be like, oh, I can get like a 1 to 20 because it doesn't matter. That's not how initial balance works. Like, this is the safest zone technically to put it. And it already gave, like, you were risking 8.7 points and it hit full TP for 18 points. If you had taken partials and gone break even at 25, you would have got stopped out. So that's why I like to de-risk it. So the first target is going to be the 0.5 extension, just to start with. So that gives you a 1-to-1. Once the 25 gets hit, then reduce your stop loss to 1.5, and you'll see you wouldn't have got tagged out until it just edged the 0.5 level, which was annoying. But again, it's low volume day, so it's less likely to happen. But you would have got stopped out if you hadn't already taken partials. And then if you look at the day before, which was like a normal day, and again, this is on the 30-minute, so you're risking 12 points to make 12.8 points to make 26, and instantly, well, not instantly, about 15 minutes later, it hit the 0.5. So that's your main goal. That's like your main thing. So like take off like most of your position and then let a runner run, because then look what happened. Initial balance sets the tone for the day. If it's a range day where it's barely breaking out and it stays inside the range, it's likely going to continue for the rest of the session. But if it breaks out, it likely goes in the same direction. So look at this. Can you see that future? This was 118 point. If you just held it. Well, technically you would be out on prop firms around here because the market closed at this level. So that was still, again, you were risking 12 points to make 50 points. That's a 3.8 hour trade. But like I say, I'm trading Forex mainly now. So I could have held that even longer if I was watching that. And then same with Russell. I used the 30-minute for that. So YM, US 30, Russell, they're on the 30-minute. So that's 9:30 to 10 a.m. Eastern time. And you can just go, like I say, the beauty of this is like you can just go back. So when I was on NQ, like I literally just went back to confirm for myself how many times once it breaks out does it stay above the range. So you can see here, look, We break out the range. This was FOMC day. We never broke out the high. And what did we do for the rest of the session? We continued going lower. So you could have had amazing trades there. The first break was the news dump on FOMC, which was there. But then the retest, look, even during high volatility, it still retested this level, and it instantly hit for 112 points to the 50% level. And then it did it again. But once it's broken out, this is where you can use the fib levels. So if it's broken out to the low, you can use the fib level as a potential area to trade. And the stop loss can be at the initial balance high because we've already broken out of the downside. Yes, also, and I use the 5 minute just because it's a lot easier to wait for the candle closures. And I use 5 minutes on failed auction theory on volume profile. So pretty much everything I learned on volume profile, I apply to initial balance. The reason why I like the initial balance more is because these levels are set the entire time. Like once the hours formed or the 30 minutes, that's it. These levels are going to be the same for the rest of the day. Whereas when you're using volume profile, obviously they use failed auction theory. So this was like a balanced price range. We broke the high. So let's say it was there. So there's the value area high. But then what do we get? We get trapped sellers and we close back inside. We get trapped buyers multiple times and then we close back inside the range. So you have your line there. So the failed auction method is to do this. Whatever the 5 minute candle is, you can either put your stop loss at structure or on the 5 minute candle and just go for a flat 2-hour trade, or to point of control, because point of control is always going to be your first target. So this already gave a 2.14 before it hit the point of control. If you were holding it for point of control, it gave 70 points. And you don't mess about with managing the risk. Like you can trail, but you're going to have a better statistic if you just let it run, because you're only risking 30 points. But again, and you can see what happens at point of control. We then get sellers involved, and then we close back above the selling bubble, and then we try to make an attempt higher. Then we come down, sellers try to push even more, but then buyers take control. And again, you're playing the range, so you can have your position there, and you can watch the lines change in real time. So like before we even got to this point, look where the value the value low had shifted. So it's right in line with where sellers tried to take control, because there was a lot of volume here. You can tell by the peaks. But we closed back inside the range. So you can take that candle or that one. And this is a high win rate strategy. So 46 points, doing a 2-hour trade. And again, obviously I'm showing this because it's historically happened, but this is not a hindsight entry model. This was our level. The volume profile is only drawn there. So you would draw boxes or lines to be like, okay, if sellers are going to take control and push the value lower, because bear in mind, the middle of the highlighted area, the middle of the range is the fair value. So this is where institutions want to play trades from. They want to take it from the extreme of the top to take it to the bottom. Buyers want to take it from the bottom to the top because this is true premium and discount levels, right? So everything I learned from, again, using failed auction theory on volume profile, I've just done the same thing with initial balance. So we still have like 30 minutes left for this balance, and you'll see in the dashboard, it says it's forming, so it's still being created. What I'm the numbers that I'm interested the most is the range number, and this just comes down to back testing and seeing it happen in real time. Like a 300-point range is a decent range. Anything less than like 150 can typically retrace deeper into itself, but it will break out more the smaller the range is. Like it tends to have a breakout at some point. But again, you just have to watch, like, to give extra confluence is the fact that you've got the absorption bubbles indicator, so you can see in this case like those big aggressive buys here, but they instantly got ran through. So you can take an aggressive entry to a low. So even to the wick, it was like a 70 point. But again, the trend is up. So it's likely that buyers, when it comes back to this price, this is where order flow comes into play. And this is obviously for a different strategy that I use. But when I see big bubbles like this, I draw a box around them. And then the same thing with auction theory on the initial balance and the volume profile. Look what happens when we close over it. It means the buyers are accepting this price and sellers have lost. We had trapped sellers. Even on the box itself, we've got a fair value at 5 minute and we get trapped sellers. This is a perfect long entry. And if you're taking that trade, that's 103 points. And your stop loss just goes under the box. The reason being is that if sellers take control, it's likely you'll lose more. So even though here, like, it wicked through, you would have like lost another 25 points instead of just having it there. So you save yourself like a bigger loss, but you'd pretty much already hit like 75%, depending on where you was targeting. And even if you was doing a 2-hour trade, it perfectly hit a 2-hour trade. This is why I'm saying the 2-hour model on 5 minute is a high win rate, whether you use absorption or whether you use absorption with initial balance or volume profile. You heard? So on Motive Wave, obviously I have the big trades indicator, so it'll give me numbers and I'll just draw boxes. And you've seen me do it like live. If sellers are in here and we've got like, you know, big booty bubbles of sellers and price is not going higher, then obviously it means sellers are in control. So, you know, you'll see, you know, this kind of action happening, and there's obviously going to be more sellers. But as soon as buyers take control and they close above this cluster of big trades, in this case it would be like big bubble. So even here, for example, you can see these bubbles, right? Obviously it's in consolidation, so it's a bit trickier to use. It's better when you're using trends or in New York session. But imagine sell candles were like constantly coming down, and then buyers start to try to take control. They fail and it goes down a little bit more. But then look what happens when we break above. Buyers got interested because it's a classic breakout, because everyone else can see on Bookmap or in deep charts or Motive Wave with the big trades, you can see sellers were very interested in this level, but they got no follow through. So it's only a matter of time before they lose the battle and buyers step in. So again, you can extend the box. Look what happens when buyers step in. They fail to come out, but then we make a lower high, and then we close above with aggressive buys, and then we retest this zone. So again, if you're taking that trade just based off that, again, it's a classic model. Stop loss under the zone of sellers and go for a 2-hour trade. And there you go, that hit a 2-hour trade as well. And obviously with the bubbles, you can trail your risk accordingly. So now that we're seeing more trapped sellers again, and again, this is not like a hindsight thing, because we already know at this point in time, sellers were already interested. Otherwise, you wouldn't see the bubbles. You don't see the bubbles in every single candle, and you want to go by the bigger bubbles in context. Like all these were small, and then they start getting bigger, which means more sellers are getting interested. And then it's confirmed the fact that buyers were definitely interested, because look at what happens when it first broke out. It then eventually did, and we got even more buyers involved. Yes, they didn't have a follow through straight away, but your entry's already set. Like you're already taking this entry and going for a 1 to 2 based off this. And then you see more sellers get involved, and then we keep closing above them. So if you want to be even more conservative, you can trade there and then have an aggressive stop loss underneath the sell candle, because again, if sellers take back control of this price range, it's likely to go more to the downside. For the initial balance, I use the 5 minute and also the volume profile breakout failed auction theory, which again is if this was the value area high, price broke above it but didn't go anywhere, then you see big absorption. So you see a big bubble and then we close bearish below it. That's when you can take it to the point of control or the value area high, or the value area low. The 5 minute is just what I use first to see the breakout, and then you can go to 1 or 2 minute if you want to. But mechanically, for the break and retest, I'm using the 5 minutes because it's a lot easier to read. And like I say, it gives you more time to react. So even if he was waiting to break and retest on GJ, which again we know Forex typically would just break out straight away, it did retest it. So it closed below there. So you would have an order waiting no matter what. And again, you'd be targeting the one extension overall, but your first take profit, most of your position is always going to be on the 1-to-1. And then you can see here, like, there was some weird news spike, and it fucking ended up going even more to take out these lows. So you have convictions like hold the trades, but statistically, the 50% is the highest win rate. And then we can look at today, again, like we've already seen. And then let's have a look at old Bitcoin. So look at that. Bitcoin has hit the 1 and now it's retracing. So on Bitcoin, you was risking $192 on one lot. Obviously, this is Forex. And you made a 2-hour trade. So you made $381 on one lot size, basically. And you can also trade micro Bitcoin futures. So if we were taking this trade, we can see what it would be on futures. On 7 micros, risking $130 to make $262 on one full contract. But you can't trade, you can only trade micro Bitcoin, I think, on Top Step and Apex and stuff like that. But even 10 micros, 185, we know the breakouts are a lot more violent. The only thing I don't have any data on is, like, because the liquidity is sometimes thinner on the futures side of things, I don't know if you would get filled at those price points. So you could have slippage where, like, your order's like a bit higher up. But again, the statistics are high to hit the 1 level. Like, that's a beautiful trade. Like, as soon as the range was set, it already tagged you in on this wick. And then luckily it didn't come to 50%. But again, it's a high chance that it's just going to hit the 1 level on Bitcoin. And like I say, you can verify for yourself and play with, like, the timings. So again, this was Friday, instant breakout, retest, hit it again. Then we hit the 1 later in the evening. I trade this on weekends. I took a small loss there, but then it was a take profit on the reverse. Then it retested it again, hit the 1 again. So even though I took a loss, even if you took a full loss of $230, you still ended up making, if you had your hedge positions, you made 458 the first time. So you already recovered your loss, and then it hit again. So now I'm up like 3R for the day or whatever. There's Thursday, instant breakout. Friday, instant breakout. We hit the 50%. And this is what I'm saying, where you can use the 50% level for a new entry, or just have another order placed to try and take it again. And then on the second attempt, it hit 1 and infinity. Then it even retested it again on this, like, massive fucking wick. So you'd have, like, a buy stop if price was coming down, but you might not have got a position on there because of that wick was so aggressive. But then once it's done its job of hitting the take profits, what's it do? It then breaks to the downside, instant breakout, hit the 1 in like 25 minutes or whatever. So you can make a lot of money on Bitcoin just with a mechanical hedge system. Again, here's Tuesday last week, instant breakout. We hit the full take profit. At the 50%, you're taking off most of your position and go and break even. Retested it. Then we get an even better confirmation, because what do we get here? What's this? Trapped buyers. Candle goes back into the range. Your stop loss is covered there. And you hit basically the 1 again without ever hitting the 50%. And then here's Monday last week. Instant breakout. Failed to get the 0.5, but you're taking partials or de-risking it or go and break even at the 25. But yeah, that's pretty much it. Like, rinse and repeat. Again, here's Sunday. Even on Saturday and Sunday, it does the same thing. Instant breakout. Hits the 1 level. After it's done that, instant breakout. And again, you've got your position already waiting. So not only did it go to the $200, ended up going literally on one contract, it was like a $1,500 trade if you were holding it. Saturdays are less probability. So the first breakout would have stopped you out. Second attempt did get the 0.25 level, and then it broke out to the low. So like Saturdays I kind of like try and stay away from unless I'm looking at the chart, and I'll just look at it in terms of volume, like how fast the candles are going, because even on the Saturday just gone, even though I took that small loss, as soon as I saw the bubbles, I closed out the position, and then the speed of the candles got even more. So if you had your order waiting there, like you were pretty much done for that day, like straight after a small loss. And again, these are 5 minutes, so you had like 25 minutes to like compose yourself. I just decided not to trade again, but then it retested it, so then I just took the second entry, and then that hit the one again. So super simple model, and again you can use it on all the pairs. So we can look at Russell. This range has now been formed. We haven't broke out of it yet. Let's have a look at NQ. NQ still has 20 minutes to go. It's looking like a continuation to the upside just based on the candles. But again, that can be confirmed once it breaks out. But it also could be a range. So you have to just have some patience. But with it being on the 5 minute, you have time to react and think about stuff.